All
Good
right.
morning, everyone. Yep. Hi there, everyone. Guess we're gonna get started promptly at 11. I know some others will probably be joining us. But thank you. Thank you for joining Tom and myself today to talk about the Form 990, Beyond Compliance, how to turn your 990 into a strategic asset. Tom, if you want to go to the next page. We'll just introduce ourselves briefly for those of you who don't know us. My name is Katrina Olson. I'm a senior manager at Whittlesey. I have spent my career at Whittlesey over 20 years with a practice concentration in nonprofits. So I focus my efforts on audit, assurance, and then, of course, Form 990 for nonprofits. Tom?
Pretty much similar experience, just like Katrina. I devote my entire career to nonprofit organizations on the assurance side, as well as with the Form 990, as well as you throw in a 990T or EZ. I do most of the private foundations for the firm as well.
All right, so we have some objectives for today. First, we want to understand the Form 990 essentials, learning how each section of the 990 reflects your organization's activities and financial health. We're looking towards transparency. How do you enhance transparency and discover best practices for highlighting your nonprofit's impact and stewardship? Transforming compliance into opportunity. So utilizing the 990 as a marketing asset to attract donors and stakeholders. And then obviously avoiding common mistakes. So identifying and sidestepping any pitfalls that could harm your nonprofit's reputation. I want to mention, I know we still have folks joining. So for those of you just joining, welcome to our webcast today. And I did want to mention in terms of the chat, how we want to handle things today. So Tom and I are going to do our best to answer some of your questions in the chat, or feel free to chat with the other participants. If you're not familiar with Zoom, at the bottom panel, there is a Q&A button that's separate from the chat. So Tom and I are going to be focused on the Q&A. So please do utilize that with any specific questions. All right, the next slide. So the next slide covers just kind of a graphical picture of how you can maximize the impact of your Form 990. So Form 990 is, of course, about so much more than just compliance. It is an opportunity to tell your organization's story. You can explain what you do, why it matters, and how you're making a difference in your community. And you want to be clear and accurate in demonstrating your financial transparency and accountability, showing how your resources are being used to support your mission. All right, let's go to the next slide. So the core form of the 990 is pages 1 through 12. It provides a comprehensive overview of your organization's operations, financials, and governance. So it covers essential information such as your mission, governance structure, revenues and expenses, and compensation of key personnel. So this core section of the form paints a clear picture of how a nonprofit is being managed and whether its resources are being used in line with its mission. All right, next slide. So the supporting schedules support the core form. So there's schedules A through R. And these schedules provide additional detailed disclosures specific to certain activities or areas of compliance, or also special types of organizations. For example, schools or hospitals have separate schedules. So the purpose of these schedules are to provide a deeper dive into these specific areas and it gives you as a nonprofit, an opportunity to show how you're meeting regulatory requirements, and also kind of provide some additional information on financial information and operations. All right, so we're gonna kind of go through page by page, the 990 and some of the more common schedules. Tom's gonna kick us off.
All right, thanks, Katrina. So we start off with page 1. This is the first thing that everyone's going to see, whether that be internal stakeholders, donors, someone online looking at it through GuideStar. And it's really a summary of a lot of the information that's contained within the rest of the form. It starts off with a heading, and then it goes through and looks at your mission. And then we go on to a high-level overview of contributions in your balance sheet. And then we've got finally on the bottom who is actually signing the return. So although a lot of this information is populated throughout the rest of the return, there are some common pitfalls. Up in section B, we see from time to time information is not updated, whether there's a change in address, a name change, if you're changing year end, etc. So we're going to use the term Sally quite a bit throughout this presentation. That stands for same as last year. And Sally's cousin is Wally, which is wrong again, like last year. So we just want to follow.
We don't like Wally.
Yeah, we don't like Sally either, but I think that the takeaway is just make sure you just don't roll things forward and you actually take a good hard look at some of that information. I also want to make sure that you have the correct signer. It should be an officer, whether that is your CEO, CFO, board chair, treasurer, etc. Someone's got who has the authority to actually sign the return. And then one tip that I always look at when I'm reviewing a 990 for my clients. So when we get to part 1, the very first line is to briefly describe the organization's mission or significant activities. And it's always good if this matches, again, the rest of the organization's materials, marketing materials, donor materials, etc. There should be some sort of tie-in, and it should also be concise. There is additional space if you need on Schedule O, but we always recommend that you try to be as concise and keep it on one line so that the users of this return don't have to go and flip pages to find the rest of the mission statement. So that's page 1. We'll move on to the second page. And for me, this one really has a lot of bang for the buck. I say this is one of the most important pages on the return because, as Katrina mentioned, this can be a very powerful marketing tool, development tool. This is your opportunity to tell the organization's story. What have you accomplished throughout the year? What do you do? And this is a really good spot to do that. So some of the common pitfalls that we see is that the mission statement does not present well. What does that mean? Again, it could go onto Schedule O and be a dissertation where it's going to be too long and you're going to lose the focus of the readers. It also might not tie in with the rest of the organization's branding and other materials. So we always recommend, it's good to have someone from development or marketing take a look at what is being typed in there as well. The same thing goes for those program service accomplishments. That's going to be on lines 4A, B, C. And if you need more, and those can go onto Schedule O as well. And then we have a few technical areas that we see quite a bit. The total for program expenses should tie back to part 9, which is your functional expenses, that program service column. And the same thing for the revenue. That should also tie back to part 8. The total for that column. And then finally, when we see including grants of, that's not grant revenue. Those are grants to individuals or other organizations. And if that's over $5,000, that could trigger Schedule I. So that's something to keep an eye on. Moving to the next slide. So we do have some recommendations, as we mentioned before. Try to have consistent messaging throughout, and that really should tie back to your website, your financial statements, etc. Be as concise as you can so you don't lose the attention of the reader. Again, have someone in marketing as well as operations look through the program service accomplishments, and those should include specific measurements such as the number of clients served, days of care provided, number of sessions or events, publications, etc. As much qualitative and quantitative information as possible, and really use those lines. We see, and Katrina, you can correct me if I'm wrong, some nonprofits that have multiple programs, multiple different types of things that they do, and they'll put everything into just one line and they'll have a sentence. So again, if
Right.
you really tell your story, you want to flesh that out and kind of go program by program for the significant ones and make sure that they're getting the attention that they deserve.
Definitely. All right, I'm gonna talk a little bit about the next few pages. So
Oh,
page
hold on,
3.
Katrina, one quick, looks like we already
Oh,
have
we got a
someone
question.
in the
Oh,
Q&A. Our friend Patricia. So her question is, what if the prior 990 did not properly reflect the programs, but they were not new? Would you answer question 2, yes or no? I would not answer that as yes. I would just make the correction prospectively and fix it in the current year. Again, this is
yep,
only an information return. It's certainly not worth going through the hassle of amending just for that.
yep, agreed. All right, so page 3 is the checklist of required schedules. So the purpose of this page is to determine which additional detailed schedules need to be completed. So we mentioned that earlier on an earlier slide. This tells you whether you're completing schedules A through R or not. Some common schedules are A, B, and D. So most of you probably have those 3. Some common pitfalls, as Tom mentioned, Sally, so it's so easy to simply answer these the same year after year. And best practice would be to read through each one. So you may have had a triggering event, you may have had something unique happen during the year that would potentially trigger one of these additional detail schedules that needs to be filled out. And actually, as hopefully all of you today have your Form 990s open and are kind of following along with us as we go. For that very purpose, you might find some changes you'd like to make going forward. All right, next slide, Tom. So page 4 is a continuation. So page 3 and 4 are the checklists of required schedules. Again, we're going to talk about these in detail later, but on this page 4, some of the more common schedules that most of you may have would be Schedule L, M, and R, and we'll go through those in a little bit. So let's turn to page 5. Page 5 covers IRS filings and tax compliance. So some of the common issues here would be, again, not reviewing this form. So that's going to be a theme today. Tom and I are preparers. We're assisting, for example, we're certainly assisting you in preparing a 990, but we don't necessarily know everything about your organization. So it's so important that you read all of these questions each year and highlight anything new. Some common errors are using incorrect years for a Form 1096 or a Form W3. So many of you may be on a fiscal year, you're like a June fiscal year end or a September year end. And this, for those of you, when you're reporting a Form 1096 or Form W3 on your 990, don't forget you're going to be using the tax year. So that is going to be a little different. Another common error is if your organization did have a gala, golf tournament, or some other special event, you're forgetting to check box 7. So box 7 talks about whether your organization receive contributions where there's both a contribution portion and what we call a quid pro quo portion where you're getting a benefit for your a part of your contribution.
And Katrina, we've had this current version of the 990 for what, almost 20 years now?
A long time,
Maybe a little
yes.
less. I still have not seen anyone answer the question 14A as yes, and that's whether or not the organization received any payments for indoor tanning services during the
Yes.
past year.
Yes, there are a few interesting questions, if you never noticed that before. All right, so page 6, starting to get a little more exciting finally. Now we're getting into a list of questions around governance, management, and other types of disclosures. So we're gonna just go through a few common problem areas. So one of the common issues is not using the number of voting board members at year end. So that's a key word. You know, you may have folks sitting on the board that are not voting members, and they would not be reported on the 990. Another common error is assuming all board members are independent. So many of you, your CEO or executive director is a voting member, so they would not be considered independent, obviously, since they are paid by the organization. So that affects how those questions are answered on page 6. Another common issue we see is checking the box yes that says a complete copy of this Form 990 was provided to the board before filing. So that if you drill down on the IRS instructions, it is very specific that the full copy of the 990, all the schedules are provided to the board. Now, I do notice there's some confusion sometimes around this area. The IRS question isn't saying the board doesn't have to vote per se. They don't have to vote to accept necessarily. That's a case-by-case basis based on how your organization handles things. But the rule here is just, did the board have an opportunity to review the 990 before it was filed? And I think we have a question.
Yep.
Tom.
I think you just answered that one, Katrina. So the question is, if you send the copy to the board, do they need to acknowledge receipt of it? I think in our experience, no, as long as it's sent out.
Correct. Yeah, I agree with that.
Question.
Yeah. Yep. It's really the gist of this question is, was the board member given an opportunity to review? And then finally, one other common misconception is at the very bottom of the page 6, there's a question about how the Form 990 is made available. There is one of the boxes is called Another's website. And a lot of folks check that box as yes, because your 990 is on the GuideStar website. So that's actually incorrect. Just all 990s go on GuideStar's website. So that box there is not referring to GuideStar. So in many cases, you would probably not be checking that box. All right, so page 6 continued. So there's a few other areas. So we have some recommendations. You know, on an annual basis, you definitely want to review section B, which is the lower part of the form, and the related narratives that overflow to Schedule O. So this, for if there are any board members on the call today, you know, this is definitely an area of interest. And actually, when we present at board meetings, Tom and I always remind the committee to take a look at this list. So in particular of interest is the conflict of interest policy. It's important that you review and keep that up to date. So some of the questions on the 990 are, how is the conflict of interest policy monitored and enforced? And are there related party transactions documented in the board minutes? And then by extension, are any related party transactions appropriately reflected in Schedule L? So we'll talk about Schedule L a little bit later. But that conflict of interest policy is very critical. So I see some organizations where, you know, they're very active about keeping that up to date and addressing it on an annual basis. If you've kind of fallen off the wagon, so to speak, and maybe have not been consistent, that's definitely a recommendation we have, is to make sure your board and key management are addressing any conflict of interest policy disclosures.
Yeah, and just one other note on page 6 here, like Katrina mentioned, we always bring this to the attention for presenting to a board or an audit committee. And we do that because although the policies in section B, that's, whistleblower policy, document retention, conflict of interest, they're not required by any means by the IRS. The more boxes though you have checked off as yes, that shows the users of this return, again, whether they're donors, funders, et cetera, that your organization is properly governed. If you are on, say, the other side and you're a foundation providing grants to other nonprofits, this is another good one to look at because, again, you can see, do they have these strong governance policies, which will help to ensure that the money that you're granting will actually be spent the way that it's intended to be spent. So with that, we'll go on to page 7. And this is another one of my favorite ones. I get all the juicy ones. We see quite a few errors on this. There's a lot of confusion relating to page 7, which is compensation of officers, director, trustees, and employees, and highest compensated employees. And again, as a user myself of the Form 990, this is another page that I'll turn to kind of benchmark against other organizations. So some of the common pitfalls that we see, we have people checked off as the incorrect position. Again, what's an officer, what's a key employee, what's a highest compensated employee? And again, it's not as though these are set up logically. A key employee is not just someone that's important to the organization. There's actual criteria. The highest compensated employee is very rarely the person who is actually the highest paid in the organization. So those are some common errors that we see. Also using the wrong year for reportable compensation. As Katrina mentioned, we're looking for the tax year and not necessarily your fiscal year. So the tax year is the year in which your fiscal year begins in. So again, just making sure we get that right, W-2. Incomplete other compensation, so that's going to be benefits, 401k, 403b, et cetera. And then finally, only listing board members serving at year end. So this really should be any board member that served throughout the fiscal year. So we're going to go into a few definitions to help to clarify. So first, trustee or director, that's going to be, again, a voting board member that served at any time during the year. And the key words here are voting and served at any time. I know that Katrina mentioned this before. If you've got someone on the board and they're just there to sit in on meetings, but don't necessarily have a vote, then they would not be included on this form. We see that a lot with schools or school foundations where you might have a student representative or a faculty representative. If they don't have a vote, though, you would not include them. An officer is typically defined as someone in the bylaws. So more often than not, that's going to be your chair, your vice chair, secretary, and treasurer. But again, it's really on a case-by-case basis. So you really do have to look at those bylaws. In addition to that, we have two other definitions for officer. That's going to be the top management official, which is usually your CEO, executive director, regardless of title, and the top financial official. And that's going to be your CFO, accounting manager. So for those two, it really doesn't depend on the title. It's who has the ultimate authority for managing the organization and its finances. So now we're going to go down to a key employee. And this is what I alluded to before. It's not just someone that's important to the organization. There are two tests. And again, there's a little more detail in these specific IRS instructions. But the first one right off the bat is $150,000 in reportable compensation. And then from there, there's also a responsibility test. So again, it's very important to not just check the box key employee, but really look at what does that individual do and do they meet those two criteria. Then we come down to the highest compensated employees. And I should have mentioned, there's no compensation threshold for a trustee, director, or an officer. Key employee is 150. So then we come down to highest compensated. That's everyone left over. That's over $100,000 in reportable comp. That's going to be the top 5 if there are 5. And then one final tip: you should only be checking one box in this column C here, unless the person is a director and an officer. So you can't be a director and a key employee, or a highest compensated employee and an officer. It can only be one, unless it's trustee and officer. Okay, so I mentioned this concept of reportable compensation. And what that means is, what is the amount on either a 1099 or W-2, and that's going to be for the tax year and not necessarily the fiscal year. Specifically for the W-2, it's not going to be boxes 1, 2, 3, 4. It's going to be box 5. So take a look just to make sure you've got the correct box. And then we come down to other compensation. And Katrina, I know that we've looked at this in quite a bit of detail in the instructions, about 2 pages of examples of other compensation. But the most notable are health insurance benefits, employee retirement contributions, pension expense allocation, life insurance, etc. Okay, so I think we're done with page 7. Page 8 is really the continuation, and we get into the highest compensated contractors. So again, some of the pitfalls here on line 2, we've got the total number of individuals that earn over $100,000. Again, our software tries to make this helpful, and it will calculate the number over 100,000 based on what is entered into the little chart here. But if you are maxed out at those 5 highest compensated employees, and you've got another 10, say, that are over that $100,000, it's not going to know that those people exist. So you really need to go back and double check that that count is correct. So moving on to independent contractors, we see quite a bit of confusion here as well. What constitutes an independent contractor as opposed to just a vendor? Well, it's going to include professional fundraisers, law firms, accounting firms, management companies, especially if you do real estate, investment managers, information technology, etc. If you've got a building and you outsource the janitorial or the property management, that would be included as well. So it's not just every vendor that's over $100,000, it is contractors. So that does not include utilities, insurance, rent, etc. Okay. So now we'll get into the numbers, and just one thought before we go into the specific pages. Where do these numbers come from? Those are very good questions. So how do pages 9, 10, and 11, which is revenue, expenses, and your balance sheet, reconcile to your financial statements? Are we taking the numbers directly from the financial statements? Is there a Form 990 account grouping report to go to those specific lines? These are all very important questions that you should be considering when you're preparing the Form 990.
All right, I'm going to take it over here for page 9 and 10. So page 9 is the statement of revenue. And this page categorizes your organization's revenue across 3 categories. So that's 3 columns at the top of the page. So related or exempt function revenue. So this is your revenue related specifically to your organization's exempt purpose. And examples may include membership dues or museum admission income, for example. Any unrelated business income, that's the 990, that's income report on your 990T. So we're not going into the 990T in detail today, but just to touch on it briefly. So if your organization has any trade or business that isn't substantially related to your charitable purpose, then that potentially would be reported on your 990T and subject to unrelated business income. So some examples of that include debt financed rental income. The keyword there is debt financed. So if it's not debt financed, it's may not be subject to UBIT. Also, any advertising income, or for example, we've seen cases where there's like a cell phone tower on the top of your building. Those types of incomes would be reported as unrelated. And then the third
cell phone, just to clarify, that's if you own the actual utility pole. If you have an agreement with T-Mobile or AT&T and they just plop the thing on your roof and you've got no control beyond that, then that wouldn't be UBIT. But if you actually rent out a cell tower that you own, that would be subject to UBIT.
And then the final column is excluded revenue, and that is primarily your interest and dividend income or other gains or losses on sales of assets. Next slide, Tom.
Looks like we have one question about unrelated business income, and is there a percentage threshold for unrelated business income? I don't think there's one officially. I think what is used in practice would be about 15%. Again, if you're renting out some space, if it's 15% of the total building, you could probably get away with that. But again, you'd have to look at that on a case-by-case basis.
And there is a dollar amount, though. I think the dollar amount that triggers the 990T is pretty low. It's, I believe, only $1,000.
Yep.
All right, so still on page 9, statement of revenue, looking more at the left-hand side, the rows. So the rows provide information on your organization's kind of slicing and dicing your revenue between contributions, program service revenue, and then other income sources such as investment income. So line 1 focuses on everything that's related to contributions. So there's separate lines, for example, for federated campaigns like United Way, membership dues that are representative of contribution, fundraising events. So, for example, the portion of a gala that's in excess of the benefit received by a donor. And then government grants is a big one. That's line 1E. So if you do have a single audit, I would definitely recommend comparing that line item to your schedule of expenditures of state financial assistance or federal assistance. And then there's a catch-all for all other contributions. There's also a line for non-cash contributions, and that should trigger your Schedule M. So we'll talk about Schedule M a little more later. Next slide, Tom. So this is our last one more page on statement of revenue. So line 2 is your program service revenue. This is your earned income. So this is separate from contributions. This is where you're outlining any earned income generated by carrying out your organization's exempt purpose. So usually program service fees, essentially. And then if you start going down into rows 3 and onward, some of the primary areas there are interest and dividend income, gross rents from rental income, realized gains and losses from your investments, notably not unrealized gains and losses, which are a reconciling item, and then also special event income. All right, let's move on to the statement of expenses. Statement of functional expenses is on page 10. So this breaks down your organization's expenses by program service, management, and fundraising expenses. So this one purpose of this form, this page is it helps the public assess the efficiency of your organization. So definitely keeping in mind your percentage of program expenses as a percentage of the total. And those program service expenses should be representative of costs incurred to carry out your exempt purpose. Management and general costs are those that are more for overseeing and running the organization. So some examples of that would be maybe your finance department, expenses, legal, accounting, HR, those sorts of things. Fundraising, fairly self-explanatory. And then one consideration is this should reconcile or agree to your audited statement of functional expenses. So there are a few reconciling items, such as investment management fees, but when you're reviewing your 990, you want to make sure what you're reporting as program G&A and fundraising reconciles to your audited statements. All right, next page, Tom. So just drilling down on a few things on the statement of functional expenses. So then the IRS has given very specific line items and very specific disclosures or instructions, I should say, about what should be reported in each of these line items. So I know Tom and I have always recommended that organizations take advantage of disaggregating your expenses to fit in these line items. So what that means is perhaps on your audited financial statements, you have a more concise or more aggregated presentation. But the purpose of this is truly transparency and also giving readers of the 990 an ability to look at various organizations, compare and contrast, and see how you're utilizing the resources. So just a few key line items I wanted to mention. Lines 1, 2, and 3 represent any grant expenditure. So if you're an organization that passes through grants to others, this should also tie into your Schedule I and tie into your single audit schedules. A common one is line 5, compensation of current officers, directors, and key employees. So you're always going to have a number here. And one of the common errors here is if you are in a fiscal year end, like a June 30 year end, this line item is going to be your fiscal year end, whereas page 7 is on a calendar, like a tax year. So they're not necessarily going to match exactly.
Yeah, and it shouldn't match that either if you have, say, a highest compensated employee, because they're might be included on the other page, but they're not included here on page 10. It's just officers, directors, and key employees.
All right, and then finally, just jokingly say a public service announcement. We really don't like to see a lot down in the miscellaneous category. It's not transparent, and you want to try to utilize the lines that the IRS gave as much as possible. So just avoid throwing a lot in miscellaneous.
And the two things that I always check for right off the bat, looking at, say, the accounting fees, which is going to be our audit fees. If that has a number that's in anything other than management in general, that might indicate that you're just rolling it along, Sally or Wally. But again, our fees should be just management in general. And then also, if there's nothing in information technology, Katrina, I think when we started doing this form years ago, that might have been a small number, but we are now thoroughly through the year 2024, and every organization has some sort of information technology. So that could be phone, your cable bill, their softwares, any hardware that doesn't get capitalized. There should be a number there on line 14. Okay, moving on to page 11. There's not really much here. It's a balance sheet. Again, assets should equal liabilities and equity. If it doesn't, that is a big problem. But beyond that, some of the common pitfalls is that the numbers won't tie back to the financial statements. Again, that kind of goes back to our previous slide. How does everything tie out? not disclosing related party transactions. There are some loans for related party loans and notes payable. So if you do have those, maybe they're not separately stated on your financial statements, but they should be here for IRS reporting purposes. And then finally, just using other assets and liabilities as a catch-all. You want to be as specific as you can. Okay, then our final page for the core form, page 12, we really have a reconciliation of net assets. So coming from total revenue, total expenses, and then again, reconciling that out, that should match your financial statements. So you could have a few red flags here if you've got a lot of things in other that could indicate that things don't properly reconcile. If you do have a restatement, a prior period adjustment, there's a specific line for that as well. And then the last section, part 12, the financial statements and reporting. If you have a audit in accordance with uniform guidance, that's be a federal single audit, you should certainly have those boxes checked that you're subject and that you've got one. Beyond that, you also need to indicate how your financial statements are prepared. Are they consolidated, issued on a separate basis? Make sure you double check that. And what level of assurance, if any, you receive. So again, compilation, review, and audit, they're all technical terms. So just make sure that matches the opinion on your financial statements. Okay, so now that we have the core form, we've got about 15 minutes to run through some of these schedules and then answer any questions at the end. So we are going to focus on the more important ones and not go through every single schedule. So the most prevalent is going to be Schedule A. Just about every 501c3 will be subject to this. And it's really an important one. This is one of my favorite schedules because it determines that you are a public charity and you can file a 990 as opposed to a private foundation where you would be subject to a 990 PF and potentially pay an excise tax. So some of the common pitfalls that we see, just checking the incorrect box you should be doing is referring to your IRS determination letter to make sure that you are doing the right one. So we'll get into the specific pages. Now we've got page 2 and page 3 look very similar, but they are a little different. So for page 2, that's going to be if you're a 509A1, what's called a publicly supported charity. That's where you get most of your revenue through public contributions, government grants, etc. So some of the common pitfalls that we see, gifts and contributions right there on the first line don't match part 8 of the core form. And again, this is all done through our fancy tax software, but it doesn't always come out with the correct answer. And those numbers aren't necessarily linked. So you really have to double check to make sure that the amount in that 2023 box matches back to part 8. And that's if it should. You'll see the next line is another common error is not omitting unusual grants. And that's also very important because an unusual grant could jeopardize your public support percentage. And that's the whole purpose of these pages, is to determine, again, that you're over a 33 1/3% and you are publicly supported. So if you have a very large unusual grant or gift, that could jeopardize that. So you need to make sure you've got those identified and you back them out of that total. And then the next one on line 5, this is what we see very often. I think a lot of people just gloss over this one, but you're really supposed to be backing out any excess contributions. And there's, again, some certain criteria, but basically 2%. So you can think of a general rule of thumb. If it's going to be on your Schedule B, then you should probably be looking at it to see if it needs to be taken out of line 5 here. So that's going to be from any individual, corporation, or private foundation. So again, if the donation is coming from another publicly supported charity, like think of Hartford Foundation for Public Giving or one of those other large community foundations, you're okay. If it's coming from the state or federal government, again, that would not be subject to this calculation. So if you get one thing out of this entire webinar, it's look at line 5 here on your Schedule A. And then again, moving down to section C, it's important that you're over a 33 1/3%. That indicates that you are publicly supported. If you're getting below that, you really want to take a look and make sure you're on top of that so you don't lose your exempt status. Okay. So the next page looks almost identical, but it's pretty much the same issues. So we're not going to go through every single thing. Again, look for unusual grants. Back out the excess contributions. If you have board giving, you also need to back out contributions from disqualified persons. Same thing. All right, Katrina, I think it's back to you with Schedule B.
So Schedule B is a common schedule. It's the schedule of expenditures. Just a few quick points here. How you fill out this Schedule B depends on what box you check here on the first page, whether you follow the general rule or a special rule. So it's important to check the correct box. But if you follow the general rule, you're going to be reporting all contributions over $5,000. Some common issues are, make sure you use the proper basis of accounting. So generally, you really should be using the accrual basis. We've run into issues where if you have your development department help fill this out, they may be more on the cash basis. So just be sure it's accrual. And another common issue is not aggregating donations. So if you have one donor giving like 4 donations throughout the year, just make sure you add them all up for that one donor.
Yeah,
And
and one other
then,
thing about that too, if you have money coming from, say, the Hartford Foundation for public giving, if it's from different funds, you would still aggregate that into just one line as well.
and then finally, there is if you drill down on the IRS instructions, they do specifically mention that using anonymous is frowned upon. So if you do know who it is, technically you are supposed to report the name to the IRS, but it's important to remember Schedule B is one schedule out of this form that is not open to public inspection. So if that's any consolation, and certainly when you're posting, if you are posting your 990 on your own website, by all means, remove the Schedule B from that public copy.
Okay. So most organizations have Schedule A and Schedule B. Schedule C is a little less prevalent, so we're not going to spend too much time discussing. But again, if you do any kind of lobbying, you're most likely subject to the schedule. Just some definitions to go over the concept of grassroots lobbying versus direct lobbying. So trying to sway public opinion as opposed to directly trying to influence legislation. So keep that in mind. Recommendations, just maintain detailed records and ask for if you're an affiliate conducts any lobbying activities. We see that a lot with YMCAs, potentially schools, etc. Well, looks like we have another Q&A question for donors. Is it required to use their actual addresses? Yes, if you have it, but I've seen in a pinch if it is difficult using the organization's address. But again, general rule, you should be using the actual address.
All right, Schedule D covers supplemental information to the financial statements, primarily the balance sheet. So just be aware of a few of these key areas. And then the second page of Schedule D is very important. This is your reconciliation of revenue and expenses to the financials. So if you are struggling to reconcile your financial statements and the 990, definitely go to Schedule D and include some of the common reconciling items, such as unrealized gains and losses, as an example.
Yeah. Another one too that's become a little more in focus the last couple of years with the new accounting standards updates for in-kind contributions.
Yes.
That would be a reconciling item as well. So
Yeah,
keep in
there's a
mind
line
what-
item for donated services and use of facilities.
Okay. Moving on to Schedule G, the most prevalent part here is Part 2, which is fundraising events. So if you have a fundraising event over $15,000, that would trigger this part of the form. So a few pitfalls that we see commonly, not breaking out contributions from total receipts, as Katrina mentioned, very early on in the presentation. If you do have a special event over $75, are you informing the donor of what is the actual payment for the goods and services provided and what is the portion that is actually a contribution? Well, this is where that information would go. So you really need to break out sponsorships from, say, the ticket price that includes the meal, or if it's a golf tournament, the greens fees, etc. In addition, this is only going to be direct expenses. So even though you might have some overhead costs, you have your employees that might track their time to take care of these events, that would not be included here on the Schedule G. It's only going to be, again, direct expenses. And one thing that's that we see as well, that we get a lot of questions on, typically we're going to have a loss on the event, just because the donations really are going to help offset the actual costs of the event. So they're not going to be included in the gross income. Those get backed out. So just keep that in mind. That's normal, nothing to be alarmed by.
Schedule I covers grants and other assistance to organizations, governments, and individuals. I mentioned this briefly when talking about the schedule of functional expenses. So if you, on your single audit, for example, if you show a pass-through grants to subrecipients, you would expect to see those grants reported here. Some other examples are, stipends, scholarship, non-cash assistance. So if another thing to look for is on your audited statement of functional expenses, if you have a line item called specific assistance, that should kind of trigger a thought that you probably will have a Schedule I. All right, and let's move on to Schedule J. So Schedule J is a more common schedule, as we mentioned earlier. It provides greater detail on compensation for officers, directors, key employees, highly comp. So just run through a few things quickly here. So there is additional detail here for officer compensation and key employees. So one issue is forgetting to report if there was a bonus or incentive payment. In addition, there's some policy disclosures. So you want to review and update how executive compensation is being determined. Is there a compensation committee and a written employment contract, board approval? Our recommendations here is this is an opportunity to demonstrate your transparency and good governance by accurately and openly filling out these questions. You also want to review for any disclosure of other types of compensation. For example, first class travel, a housing allowance, club dues. There are check boxes to disclose that information. Schedule K, a little less common, but we do see this. So Schedule K is a supplemental information on tax exempt bonds. So where I primarily see this is some organizations have bonds through here in the state of Connecticut, CHIFA, which is a quasi-government agency, or in Massachusetts, there's a similar state agency may issue tax exempt bonds. So if you do have that scenario, you are required to fill out Schedule K. It just has some information about the use of the bond proceeds and shows disclosures about how you're paying down that debt. a key takeaway is if you have IRS Form 8038, that's important to have that form and able to accurately fill out the schedule. Schedule L is transactions with interested persons. And I think this one I would sum up as, think about your conflict of interest policies. So, again, good governance for a nonprofit, you should have that conflict of interest policy. If there are transactions that fall under a conflict of interest, they should be disclosed here. So some examples. So first of all, the definition of an interested person does include current or former officers, directors, key employees, and family members. So that's important to remember. It can also include major donors or investors. So just be alert for these categories of transactions. So for example, a common one might be a loan, if there's a loan between your organization and one of these individuals, or also business transactions. So in some cases, you may have a board member where there's a business transaction that needs to be disclosed.
Yeah, the other one I see a lot too, if there's a family member that works, that's related to the executive director or a board member, that'd be another one that we see pretty commonly.
Schedule M covers non-cash contributions. So there's a threshold for Schedule M. It's $25,000. But I would expect to see this form filled out a little more often, especially, in the last few years, there's been greater scrutiny on non-cash transactions from the FASB in particular. So if on your financial statements, you are reporting or recognizing non-cash contributions, just make sure you're also filling out Schedule M. It basically just highlights the amount, the fair value of those contributions. And some examples would be things like securities, used cars, clothing or household goods, supplies, pharmaceuticals. There's some others that we probably don't see as often, like taxidermy or scientific specimens. But if you're a museum, perhaps, certain types of organizations may see those. So, and Schedule M is a good opportunity to demonstrate your fundraising efforts.
Yeah, and non-cash should not be confused with in-kind. I know like they're somewhat similar, but there is a distinction. Okay, coming to the last two schedules, Schedule O really, it's just the overflow for everything else in the form that doesn't fit. It moves over to Schedule O. The biggest takeaway is make sure you read it. There's no spell check, at least in our tax preparation software. So just checking for grammar and spelling would be greatly appreciated. Schedule R, it's just related organizations. And without getting too much into it, the biggest takeaway is really checking for completeness. If your organization has a consolidated financials, there's lots of disregarded entities, or you've got real estate and your have partnership interests, just making sure that all of that is properly reflected in the schedule. So with that, I think we come to the end of the schedules. We'll just briefly go over some red flags. I don't know if we need to read through every single one of these. But just to summarize, Katrina.
Yeah, I guess just to wrap things up, I do want to mention that we will be emailing the slide deck out. So keep an eye on your email for that, and we hope you find that slide deck as a helpful resource. We'll stay on a couple minutes to answer any other questions, but when you receive the slide deck, it has my information, Tom's information. So certainly please feel free to reach out. And then just to kind of conclude where we started, make sure you're taking full advantage of your Form 990. It's not just a compliance tool. You want to use it as a marketing tool and also a tool to show your good governance.
All right, Katrina, I think we have one question on your favorite schedule, Schedule K. Would that include
Yes.
construction bonds from the state?
Is it I guess my question would be, is it a tax exempt bond? Let me get back to you, Johan, on that question. I think I need to know a little bit more detail. All right, any other questions, as we're wrapping up?
And if anything does come to mind, again, you've got our contact information. Feel free to reach out with any questions or anything we can help you with.
Well, thank you for joining us today. We'll keep you on your schedule, so get back to your rest of your day. Thanks for joining us.